Hey, well, the Bank of Canada raised interest rates. Check me out today. We're here with my friend Interest Rate. We'll see if she can predict whether or not rates will go up. Interest Rate and I are live today on TikTok as well. There we go. She doesn't like being picked up right now. It's our second time appearing on the Bank of Canada interest rate announcement here with Joe Bladdock on Canadian Mortgage Weekly. What we're going to do here today is we're going live on TikTok and LinkedIn. It's the second time I'm going live on TikTok. So if you are interested in checking me out on TikTok, you can check me out at Canadian Mortgage Weekly. And I'm there on TikTok, got some videos there. Okay, so looks like interest rate right now is eating some hay. I'm going to just try to show you her right now. She's just munching away. Let's see, we can grab her here. She's just munching away on some hay. I know my microphone's not really that great right now. But anyway, that's what's going on this morning. And we're going to spotlight the interest rate announcement here today with interest rate. What I'm going to do is I have some lettuce here available to give to her. She loves her lettuce. And what we're going to do is we're going to feed her some lettuce in just a moment to see if she believes rates will go up. And we've had a conversation this morning, my little mascot Interest Rate and I. We think that if rates are going to go up, we're going to eat the lettuce. If rates are going to stay the same, we're not going to eat at all. And if rates are going to go down, we're going to eat the hay. All right. So she doesn't really like the hay, but if she's going to eat it in just a moment here, when I give her the option to eat lettuce or hay or nothing, we'll see what's going on. We'll see what interest rate can predict. All right. So if you're just joining me here today, my little guy, my little pet here, Interest Rate, is my mascot here on Canadian Mortgage Weekly. Say hello to Interest Rate. She's here on TikTok and on Facebook, LinkedIn, all the different channels. And she's my little mascot. She's correctly predicted the last interest rate announcement from the Bank of Canada. And we want to give her another shot here today. All right. What do you think, Interest Rate? You want to give it a shot? All right. So just before we get into that, let's talk about some of the news that's been heading out today. There's been a lot of news with regards to why the rates might go up. And that's because jobs report, for example, jobs are increasing in Canada. There's more jobs being put out each month. And as of April, we saw 41,000 extra jobs in Canada added. That's a 0.2% increase. And that's a similar increase to the month before. So that means that the economy is growing. So much so that we actually saw news come out that the GDP is growing. The GDP growth was over 3%. So what does that mean? That means that economy is doing well in numbers sense. I know that there's a lot of inflation happening, and that's really causing a lot of problems for Canadians. But that's what's happening there. And going back to inflation, we're actually seeing that inflation went up 0.1% in April. I don't know what's happening for May yet. We'll see those numbers just shortly here. But that was the first increase in inflation since June of 2022. So what do you think, Interest Rate? Come here, little one. Do you guys think that interest rate will predict that rates will go up or down? What do you think, Interest Rate? No? All right, let's put you back down there. All right, she's been a real sport here today. She's my little mascot here. As if you're just joining in, she's correctly predicted the last few interest rate announcements here on Canadian Mortgage Weekly Live. What are you doing eating the hay? All right. She doesn't have access to the lettuce yet. So if you think that rates are going to go down, that's not going to happen because she doesn't have access to the lettuce yet. I have it right here in my hand. She's been eyeing it all morning as we've been setting up for this episode. All right. So what's been happening to the bond yield? I know that I talk about the bond yield on my podcast, Canadian Mortgage Weekly, Canada's only weekly video mortgage news podcast, and that has been going up considerably. Last time there was a rate announcement, we saw the bond yield down about 60 basis points. Now it's up 60 basis points. So what does that mean, right? That means that rates could go up because what's been happening, fixed rates have been going up. Since the bond yield has gone up, fixed rates have gone up, right? Interest Rate. You're just looking at me like you want the lettuce. All right. She might think that rates will go up in just a second here, but we have about 10 minutes before the interest rate announcement comes out in Canada here. I'm wearing my wacky interest rate shirt. Are they going up? Are they going down? I'm not sure. But as a mortgage broker, I know that I get calls like this every day. I want to make sure that I'm up on the news, ready to go. And if my clients are in a variable rate mortgage, they know what to do. All right, what's been happening with the CDOR rate? CDOR rate predicts and gives us mortgage brokers and bankers an idea if a variable rate is a viable and competitive option. And it's been staying steady for the most part since January of this year. It had gone up hugely before then. It was under 2% back during the pandemic. Now it's over 5%, 5.07% right now. And just this last few weeks, it has gone up like 0.1, 0.2%. So that's indicating that variable rates might become even less competitive into the future. All right, what have articles been saying? All right, let's grab interest rate here one more time to give us a show here. Say hello to TikTok interest rate. There you go. This is my mascot. If you're just joining me, say hello to LinkedIn, say hello to Facebook, say hello to Instagram, say hello to Twitter. All right, if you're just joining us here, follow us, me and interest rate, to correctly predict the interest rate today. Bank of Canada's interest rate announcement. What we'll be doing is we'll be giving her some hay, some lettuce, and if she eats the lettuce, rates are going up. If she eats the hay, rates are going down. And if she hides away, rates are staying the same. All right, so what have the articles been saying? Articles have been saying that rates could go up this time. Bank of Canada left it on pause to see where things were going. They left things on pause, and what happened? Inflation went up just a little bit last month. House prices actually have been going up considerably last 4 months now. We saw a 4% increase in April, a 4% increase in March, an 8% increase in February. Quite crazy, actually. House prices have gone up quite considerably since the beginning of the year. Inflation's up, house prices are up, jobs numbers are up, GDP is up, bond yield is up. All those affect where the Bank of Canada wants to go. And because they paused last time and now they're meeting again this morning for 10 a.m., the announcement will be available in 7 minutes. 7 minutes from now, we'll be discussing whether or not rates have gone up or down, and interest rate will be with me here with her prediction, right? Interest rate. All right, let me grab her again here. Introduce you to interest rate. There we go. Say hello to interest rate. She's just hanging out here, having a good time this morning for the interest rate announcement. We got her set up on my desk here with a bunch of different little toys and some hay. And unlike last time, I've kind of prepared a little bit. So she, if she does go to the bathroom, then we have some preparations here. All right. So as I mentioned, articles have been saying everything is up. Economy is up. Jobs are up. Inflation is up. Everything is up. So what does that mean? That means that the Bank of Canada might have to do something. They might use this opportunity to raise rates. All right. What have the clients been saying? Well, a lot of clients actually jumped into the market last few weeks because they saw rates pause the last time when the Bank of Canada met. That was March of 2023. That was the pause. And since then, buyers have been jumping in. And since buyers have been jumping in Canada, what have we seen with house prices? National house price increased in March. National house price increased in April. And because of that, that could be even contributing to the inflation numbers that have gone up in the last few weeks. So, mind you, it's only a 0.1% increase in inflation. That is a small increase. One of the smallest increases I've seen since the inflation has been going gangbusters here in Canada. So what have clients been saying? Clients have been saying that they believe that rates are high, and they believe the rates are high and here to stay high. Some believe that rates will come down in the end of this year or at the beginning of next year. But for now, the ones that are getting into the housing market, they're thinking, you know what, Joe, rates are high. They're going to probably stay this high for a little while. And we just need to get in the housing market. We're done with waiting to buy. We're done with waiting to refinance. We need to do something today. So a lot of clients are locking in for those 3-year terms, 4-year terms. And as far as variable rates, no one's really taking a variable rate mortgage right now. So with that, it's interesting to see what clients are saying with all of that. All right, what do you guys think here? Let me pop a question up here for you on my TikTok. I believe I have a poll here, if I can find it. All right. I did put a poll together. Let's see if I can find it here. Again, this is one of my first times going live on TikTok. I don't know if I can put it in here without stopping my live. Quick poll. There we are. And all right, there's my poll. I don't know if you can see it, but if you think rates are going to go up or down, if they're going to go down, you can do the sad smiley face and up, sad smiley face, down, happy face. And we can go from there. So what's happened last time? Well, last time there was a rate increase was January. It was a 25 basis point increase. Last time there was a decrease was March of 2020. That was a decrease of 50 basis points. And last time there was a pause was actually March of 2023. So that's most recent. Websites are reporting that there could definitely be a 0.25% increase today. And the chance of rate increases, usually I check the Mortgage Dashboard website. That's a really great news website in Canada. Puts together all the different mortgage news together. And with the Mortgage Dashboard, they're saying it's a 38% chance of rate hike today. And it's a big chance. It's a big enough chance. I know that with everything up right now, we could see a rate hike today, and it's very, very possible with everything going up. Bond yield, jobs, GDP, all those numbers. All right, so let's do the prediction here. I got my lettuce. We'll just grab interest rate here again. All right. Just get her going on here. So everybody say hi to interest rate. This is my mascot for my channel today here. She's just hanging out here. She's going to correctly predict whether or not interest rates will go up today. She's a little feisty this morning, so I don't know if she's not feeling the fact that that rates will go up. Her name is Interest Rate. I've named her after mortgage rate, so interest rate. All right, so here's some lettuce. Let's see if she eats it. Come on, let's put it down here right in front of you. See if she's going to eat the lettuce. We'll give her a second. If she eats the lettuce, rates are going up. If she eats the hay, just gave her some hay as well. Some nice hay. It's her favorite kind. If she eats the hay, rates are going down. And if she doesn't eat, because she is a little bit startled being here on my desk, it's not her usual thing, rates are staying the same. In the meantime, while I give her a chance to decide what to do, I will get the announcement here up on my screen. It should be any moment now. All right. And with that, let's see what is going to happen today. All right. It'll be here momentarily in 1 minute. And what is interest rate doing? Are you eating the lettuce? Did you just take a bite of the lettuce? She's munching away on the lettuce here. All right. So interest rate believes rates will go up this morning. Not great for us, but let's see what happens. And then when we find out what happened with the interest rate announcement, I'll just cover off what that means for Canadians, what that means for our credit accounts, and anything that is up there with those Canadians who have products that could be affected by the interest rate announcement. All right, she's really munching away on this lettuce. And we have some news. The Bank of Canada has just released its announcement for this morning. What do you guys think here? Interest rate predicted rates will go up. And as you see here, she's munching away on the lettuce. She's got a piece of lettuce in her mouth. And in fact, rates have gone up. 0.25% increase in the Bank of Canada policy rate. That brings it up another 0.25%. So that's going to mean a lot of different things for Canadians. What do you think, interest rate? Do you like this news, or do you just like your lettuce this morning? All right. I can tell that you do need your nails cut. So, anyway, uh, we'll let her munch on that lettuce here. But what does that mean? All right. She's back at munching the lettuce here. She's loving this lettuce. She's staying away from the hay. She's not just hiding out. That means that she correctly predicted the interest rate again today. We'll have her back here on the next show. But what does that mean here? The announcement shows here that the rates now, the Bank of Canada policy rate's 4.75%, which means that prime rate now will be going from 6.7% to 6.95%. As a mortgage broker in the business now for 13 years, I cannot believe that prime rate is pretty much at 7%. What do you guys think about that? Have you ever seen prime rate at 7%? I wasn't around buying homes in the 80s. But this is reminding me of all the stories that I keep hearing from people saying interest rates were really high in the 80s and all that stuff. So, what is it saying here as to why the Bank of Canada raised rates? Well, there's a few comments here I'll go over here. One, Canada's economy was stronger than expected in the first quarter of 2023. As I mentioned, there was the GDP growth of over 3%. And because consumption is remaining strong, and as you remember, if you've watched my previous episodes, I've been urging Canadians to stop buying things because the fact that we're buying things that's really pushing inflation up and causing the economy to continue to grow, it's actually pushed rates higher. All right. Also mentions that the labor market remains tight. As I mentioned, the jobs report has come out with higher jobs. Demand's rebounding since COVID. New workers are being high. Wow, you're really loving that lettuce, eh? Interest rate? Good job today, by the way. All right. So market's rebounding. Labor market is tight. Higher immigration than usual. And overall, the economy looks more persistent than anticipated. All right. So economy really plays a role into the Bank of Canada's announcement. Also, inflation ticked up. They make a mention in this first increase in 10 months, which I mentioned as well. Prices for a broad range of goods and services coming in higher. Now, I don't know if they are completely true with that, because what I've been seeing with one of the reasons why inflation is going up is because interest costs are going up. Those who are renewing their mortgages, getting to the point where they are buying a home, it's really causing the interest rates going up. It's causing people to pay more interest. And because people are paying more interest, it's causing them to have higher expenses with regards to interest costs, and those higher expenses are contributing to inflation numbers. That's what I've been hearing from other professionals in my industry. So it's interesting to see that the Bank of Canada is laying the blame of inflation more so towards the broad range of goods and services coming in higher, not just interest rate costs, which is, from what I've been hearing from finance professionals in my field, that is the main driver of inflation this time around. All right. It says here the Bank of Canada expects inflation to ease around 3% in the summertime, and lower energy prices will come in, and anticipating core inflation running in around a 3.5% to 4% for several months. So they raised rates today to another 0.25% to help combat all of that and the higher inflation. So it looks like inflation is number one, jobs number two, and GDP growth number three. Higher growth. So the Bank of Canada did do its interest rate pause in March of 2023, and they wanted to see where things went. They did see where things went. Things have been pretty robust here in Canada, even though there's some families I know that are getting their mortgage renewals these days, and the renewals are coming in maybe 50% more on the payment, maybe even double the payment. And that's really causing a lot of families to reevaluate a lot of their spending, reevaluate a lot of their commitments, and reevaluate a lot of their priorities. And with that, it's interesting to see what's going to happen in Canada for the housing market over the next few weeks as rates have been increased. The next scheduled rate announcement for Canada is July the 12th. So we have about a month and a week until the next rate announcement. Which interest rate? Let me just grab her again here. She's just munching away here. Let's grab you there. I don't know if you can see the lettuce. All right, she just dropped it there. Here, take a bite. No, she wants to go back to lettuce. So this is interest rate. If you're just joining me now, interest rate's my little pet guinea pig. Her name is Interest Rate, in case you're wondering. And I named her to be the mascot for my show, Canadian Mortgage Weekly. And we are here today predicting the interest rates today. So if she predicts the rate to be going up, she'll eat the lettuce, which she's been munching away ever since I gave it to her. If she predicts the rates will go down, she will eat the hay. And if she thinks rates are staying the same, she's going to hide. All right. Yes, I can try to do that. So interest rate is my pet guinea pig, as I mentioned, and she correctly predicted rates today. So it's quite crazy how she's so smart. I don't know how she does it. If you're just joining me on TikTok here, I run this show every week. My name is Joe Bladdock. I run a podcast called Canadian Mortgage Weekly. It's Canada's only weekly video mortgage news podcast in Canada. And this is episode 141, interest rate announcement. And then the next interest rate announcement is July the 12th. If you're just joining us today, the Bank of Canada did raise interest rates by a quarter point, citing inflationary pressures, GDP pressures, and job market pressures. That's three big pressures here that we've been seeing in Canada. And what does this mean? What's that going to translate to in terms of people who have a mortgage or lines of credit? How is this going to make lives different for Canadians? All right, so let me get into that here. One of the things is that anyone with a variable rate mortgage, one where the payment actually fluctuates based on the interest rate, over the next few weeks, you'll probably receive a phone call or letter or a notification of some sort from your mortgaging institution letting you know that prime rate has gone up. Right now, prime rate will be going up from 6.7% to 6.95%. And with that, we'll just see if interest rate can give us her reactions to this. What do you think about prime rate going up from 6.7% to 6.95%? Do you think that's a good idea? No, you don't like that. You don't like that at all. Back to your lettuce. You are so hungry. All right. Anyone who has a home equity line of credit as well, if you have a home equity line of credit in Canada and you have a balance on that, your minimum payment is going to go up. It's going to go up by 0.25% versus of interest. And it's just going to become a lot harder for Canadians to pay down their lines of credit now. Because if you have a balance, usually it becomes your minimum payment is your interest only. So if you're only paying the minimum payment on your home equity lines of credit, you're actually only paying the interest and never paying the balance. If you're looking at paying the balance, you need to actually convert your line of credit into the mortgage, or convert it to a mortgage, consolidate it into a mortgage, or actually put extra money down on top of the minimum payment to actually pay down that line of credit. So anyone with a home equity line of credit and a variable rate mortgage, your payments will actually be going up in the next few weeks, which is really unfortunate because myself, I have a few variable rate mortgages on some of the properties I own, and that's not great. I mean, I was looking forward to a summer with coffee and you know, being able to be out there, knowing what my spending was going to be. But now with my variable rate mortgages going up, and I myself have a home equity line of credit, we'll probably have to consider cutting back spending, maybe making more coffees at home, maybe making more meals at home, stuff like that. And I'm sure that's going to happen with a lot of Canadians as well. What's one way that you guys out there have changed your spending habits because of the rates going up? I know that it doesn't only affect mortgage holders or home equity lines of credit holders. There's actually other people that can be affected with this interest rate announcement. That is anyone who has a variable rate car loan. A lot of those car loans, the payment is static, right? But it's the interest amount that is going to change. And essentially, if you took out an 8-year car loan and you have a variable rate car loan, then your interest could essentially add extra payments down the line. So your 8-year loan could become a 9-year loan, could become a 10-year loan. If you have the type of car loan though that has a fixed amortization schedule, which means it's 8 years no matter what, then your payment will actually be going up as well. And you'll receive a letter from your financial institution that manages and administrates your vehicle loan, letting you know that interest rates are going up. All right. I've tried to lower my voice here. Someone on TikTok has actually let me know that my voice was sounding really high. Let me know if my voice is sounding better there. I'm really trying here. Thank you for the recommendation. I just got really excited here. We got my pet interest rate. As you guys can see, she's munching away on my lettuce here. Her name is Interest Rate. She's my pet guinea pig. She's the mascot here on my show this morning, trying to predict interest rates. Either they're going up or going down or staying the same. Oh, you just want to get back to your lettuce. So she correctly predicted the last 2 rate announcements. We'll just put her back here and let her continue munching away and going to the bathroom here on my desk like pets do. All right. And so those with variable rate car loan, just getting back to those, your payments or amortization may be affected quite considerably. And also variable rate credit cards. If you have a variable rate credit card, usually those credit cards have a lower interest rate. However, with rates going up now, you'll actually see your minimum payment go up as well. And if you don't make your balance payment by the statement date, you'll actually get charged interest at a higher rate. So it could be even harder for you to pay off your credit card account balance if you have a variable rate credit card. Not great, but that's the situation we're in today with these rates going up. Bank of Canada is really trying to slow down inflation here, really trying to slow the economy down by the looks of it. They don't like the fact that the economy is going at 3.1% on the GDP. They are not liking the fact that jobs are increasing in Canada, 0.2% increase in Canada, of 41,000 extra jobs, and they are not liking that inflation has gone up again. And because of that, Bank of Canada is trying to slow that economy down. They're trying to force our population to buy less things, to spend less right now, in turn hoping that prices will come down. Because really, at the end of the day, the pressures of prices going up are from consumers having such high demand on these products and services and goods and services. So really, it's up to us as much as is up to them. So mortgages, variable rate mortgages, home equity lines of credit, variable rate car loans, variable rate credit cards, and what else? There's one more item that is going to be affected if you have a unsecured line of credit. Typically, those are variable rates as well. And as I just speak about that, let me just grab interest rate one more time. She's getting better on camera. I don't know about you guys, but I think she's getting better on camera. Last time we tried having her, she was really rambunctious. All right. So as you see, interest rate correctly predicted the rate announcement this morning with the Bank of Canada. Good job, interest rate. You'll get some extra lettuce here just for doing such a good job this morning. No, you don't have to run away. You want that lettuce? Say hello. You guys hear that? All right, so this is my little pet interest rate. She's my guinea pig mascot here on Canadian Mortgage Weekly, Canada's only weekly video mortgage news podcast. We go live on LinkedIn, TikTok, Facebook, Twitter. We used to go live on Instagram, but I think I'm actually currently banned from doing live streams on Instagram. I'm not sure why. That's the situation there. And Twitter. And what else do we have here? Unsecured lines of credit. Those are products where your minimum payment will go up, your interest rate costs will go up on those as well. So what is my recommendation? As a mortgage broker in the business now for 13 years, if you have any one of these products, you're going to see a lot of opportunity now for you to pay down debt in exchange for paying those interest costs. If you're the type of person that hates paying interest to the bank, I definitely recommend trying to pay down your credit cards first that have those variable rate credit cards. Secondly, I recommend paying down those unsecured lines of credit. And thirdly, I recommend paying down your home equity line of credit if you can. And thirdly, if you're in a variable rate mortgage currently, it's really dependent on your situation as to what you should do there, if you should lock into a fixed or keep it variable, because there are a bunch of different reasons why people do want to stay with a variable rate mortgage a lot of the times. However, right now, with the current rate economy we're at, it's worthwhile to have that conversation with your mortgage professional. Should I lock in today? With rates going up again, what's going to happen to my mortgage? Should I look at some options here? Should I consolidate some of these items like unsecured credit lines, unsecured variable rate credit cards, or even my variable rate car loan into a fixed rate mortgage? Would that be a smarter move for me, considering that the economy is where it's at in Canada and that we might, I don't know if we'll see continuation in rate increases right now. As I mentioned earlier in this episode, with the Bank of Canada increasing rates 0.25%, they are predicting that inflation should pop down to sustainable levels by the end of the year. What does that mean if you hold on to a variable rate mortgage and that does happen? Well, if rates do come down and the Bank of Canada is successful in bringing down the economy, like not bringing down in the sense that shutting it down, but bringing it back, pulling it back slightly, so people are spending a little less, really pause the jobs, so there's not so many jobs being created every month, really slowing down that GDP growth. Well, we could see actually a reverse. Rates could come down. Rates could actually start coming down for those who have a variable rate car loan, variable rate credit card, variable rate home equity line of credit, variable rate mortgage. And if rates do start to come down on those items at the end of this year or early next year, we could actually see payments go down at that point in time as well. But if you're just joining me here right now to see what's happening with the interest rate announcement, we have my pet mascot interest rate. She is my pet guinea pig. That is my mascot here on Canadian Mortgage Weekly, Canada's only weekly video mortgage news podcast, here on episode 141. And we are just spotlighting the Bank of Canada's interest rate announcements. She has correctly predicted the last two interest rate announcements here, and she did it again today. So with that, this is my pet. Her name is Interest Rate. Everyone say hello. She wants to get back to her lettuce. She's loving the fact that I gave her lettuce this morning. She ate it all up, and you can probably hear her munching away a little bit there just under the camera here. And appreciate you joining in this morning for my podcast where we're talking about interest rates, where they're headed, and what does that mean for your mortgage. So if you have any questions about anything I spoke about today, please talk to your mortgage professional. If you want a mortgage professional, I have 13 years experience. I work in Ontario, Canada. I do a lot of work virtually and help clients with their mortgages get the best advice and essentially help them save money. So with that, the next rate announcement being in July, on July the 12th, I believe here, let's see here, July the 12th, 2023 at 10 a.m. We'll be joining everyone here on July 12th for another interest rate announcement. And of course, we will bring my pet mascot interest rate on the show again at that point in time to see if she can correctly predict rates again. Let me just get a better hold on her. So this is me, Joe Bladdock, mortgage broker, 13 years experience in Ontario, Canada, signing off for the interest rate announcement. As we have heard today, interest rates did go up 0.25%. And the reasons why they went up was the job market keeps adding jobs, the GDP keeps going up, and inflation also has gone back up as well. So those are three main reasons the Bank of Canada did decide to raise rates this morning. Is that the inflation went up 0.1% in April, the GDP went up 3.1% in first quarter of 2023, and that the jobs market went up 0.2% in April, 0.2% in March, and just keeps going up as well. The economy is not really slowing down. And with that, Bank of Canada wants to see where things go with a little bit more tightening of 0.25%. And with that, looks like interest rate is just going to have to get used to the fact that interest rates have gone up again. So if you're joining me on TikTok, hit the follow button. If you're joining me on LinkedIn, add me as a contact. If you're joining me on Facebook, please follow my business page. If you're joining me on Twitter, you can follow my Twitter for all the mortgage news. And if you're following me on YouTube, I forgot to mention all my crowd on YouTube there, follow the channel. We would love to hear from all of you. If you have any questions, you can join me here tomorrow. Actually, we have our regularly scheduled episode at 11:30. May was National Moving Month. June is National Home Ownership Month, where we talk about the benefits of home ownership, we talk about how to get into home ownership, and we talk about just different kind of creative ways that people can get into the market. Oh, you're purring now. You love it. Love this position. And we talk about how to get into the market. And with that, I'll be spotlighting as well as some comments from today's episode tomorrow about the interest rate announcement, how the rates did go up 0.25% today. And as mentioned, the rates did go up 0.25% today because the Bank of Canada cited the inflation went up 0.1% in April. The jobs market continues to go up in month after month, and GDP is also going up first quarter of 2023. And yes, he is looking at you. He likes all our fans. She likes all our fans. And thanks for joining us today. Interest rate will be joining us again next time on the Bank of Canada interest rate announcement, live here on Canadian Mortgage Weekly on July 12th, 2023. Oh, we're going to put her down here for a second. I think she's going to the bathroom. In just a second here. I could feel it coming. Anyway, I hope you guys have a great day. Thanks for joining me. And don't forget to hit that follow button. We'll see you all next time.